Good day and welcome. We're here to offer asset managers accelerated compounding as a service, a structurally enhanced trading and investment path that you execute in your own environment with full custody and control. There are 4 parts to this short introduction. First, we'll share the industry breakthrough, then system performance, followed by a new due diligence lens, with a demo setup to conclude. Okay, let's dive into the breakthrough. Every industry has a significant challenge that is so fundamental that it's accepted as a fact of life. In asset management, that challenge is market uncertainty itself. Uncertainty shapes returns, drives behavior, and ultimately limits what any strategy can achieve. But occasionally, a breakthrough changes reality and the rules entirely. This is the breakthrough. We've discovered how to turn market uncertainty into a structural advantage, not through better predictions, big data, or machine learning, but through a structured trading path that strengthens in the face of uncertainty. A path that treats volatility as fuel. A path built on structure, not luck. We've done this by digitizing the real-time edge of a veteran trader, his decision logic and intuition, and converted it into deterministic rules that operate inside a convex safety envelope. The result is structural convexity, a system that becomes stronger with time and market volatility. Only 2 other structural compounding paths are known to exist: Rentex's Medallion Fund and Berkshire Hathaway. We have built the 3rd path, and the first accessible to asset managers. To understand the magnitude of this breakthrough, we need to update our definition of compounding. Compounding that accelerates despite market conditions can only happen when a convex structure exists, a structure with an enduring built-in upside bias. The industry has long focused on returns, but the real driver of durable returns is the structure behind them. This is our group's first accelerated compounding engine, a digital twin engineered to deliver returns through structure, not prediction. It's been made simple and accessible, a plug-and-play convex sleeve, where clients retain full custody and no infrastructure is required. The engine or path converts uncertainty into performance fuel. Structural convexity is enforced on every trade, from entry all the way to exit, without fatigue, hesitation, or behavioral drift. Your role is simply to execute signals mechanically and stay on the convex path. Most asset managers spend their lives chasing alpha, reacting to markets, searching for signals, and managing exposure. But alpha isn't something you need to chase. Alpha is something you can create, structurally. And that is the difference between a fund and a path. A fund tries to outperform. A path compounds by design. This is that path, a structural compounding engine that accelerates growth through convexity. Delivered as infrastructure you plug into your existing environment. This is why we call it the 3rd path. So what does this look like in real numbers? Here are the results from the last 5 years and across 5 FX212's pairs. Losses are small and capped. Winners are asymmetric. Annualized growth in US dollar terms ranged from 10% to 43%. Depending on one's chosen risk and reward level over that period. The payoff shape is consistently stable, and this stability produces an accelerated compounding curve across multiple market regimes. Why? Because structure drives outcomes, not market conditions. With structure, the Forex market becomes ideal for accelerated compounding. Deep liquidity protects the downside. Natural volatility fuels convexity, and the imposed rule set eliminates behavioral noise. Given that Forex as an asset class has now been structurally enhanced, it can confidently be added to a fund's traditional equity, bond, and property mix. By adopting the new path with its new asset class, you can create a meaningful uplift in portfolio returns safely without leverage, and without any additional operational burden. So now to evaluate the path yourself, you get to evaluate the structure, not just the past. Track records look backward, but structure explains the present and how future outcomes play out. Now it's time for the new due diligence lens. It should focus on three questions. 1. Is the upside asymmetry real? 2. Are the rules of convexity enforced? And 3. Does the curve behave like a convex structure across all market conditions? The key metric to focus on is the PLR, the profit-to-loss ratio. The system's PLR is tracking at 2.6 to 1 over the last 6 years and continues in live trading. This ratio expresses everything: small controlled losses relative to larger asymmetric winners, and this ratio should remain central in your due diligence. The engine or path follows 3 structural phases. Discovery, the phase in which PLR is forming for those just joining the path. The stabilization phase, where PLR settles into the 2.2 to 2.6 band. And harvesting is where convexity expresses itself and the curve accelerates. The governing rule set that underpins the structure is strict. Only signature setups. With any downsides, these are capped instantly, and upside always remains open. There are also no forced trades, and the PLR band is monitored continuously. If these rules are enforced as designed, then getting to the harvesting phase and to accelerated compounding becomes a mathematical consequence. It's commonly accepted that most investment and trading strategies weaken as uncertainty rises. Convex structures strengthen, however. Your role is intentionally light. Just keep risk per trade constant, execute signals precisely, and let structure and time compound. To validate the engine or path, you can run the free demo while you conduct the due diligence. Open a free IG Markets demo account. Add virtual funds, ideally $1 million, but any amount works because position sizes can be adjusted accordingly. Build your workspace by adding the pairs you're seeing right now on the screen. You'll notice we've also added spot gold as the commodity conforms to the path's trading structure and contributes well to overall performance. Then check 2 default settings, please: International Mode and CFD Mode. For perfect execution, please book a short walkthrough with us once your demo is set up. Trading execution takes only a few minutes each month given the low-frequency mode, but alignment is essential, so let's chat, please. When your demo is active and you're executing our signals, you'll see the structure unfold exactly as described: the rules, the asymmetry, and the accelerating compounding curve. To close, our purpose is to support your goal of compounding wealth reliably across years, decades, and generations. From all of us, welcome to Accelerated Compounding as a Service.